Hello, everyone. This is Martin. I am back for another great trading year, 2016. So, first of all, I want to wish each and every one of you a happy new year. I'm really glad to be your instructor, and I'm waiting for all your questions, emails, inquiries. It doesn't matter if you've got a million inquiries and you want to get in touch with me, that's okay. I'll try to answer each and every one of your questions. And remember, I've always said to you in the past, there are no dumb questions. I'm always here ready to help you. So, looking forward to rocketing into the new year. We're on our way to a planet called Forex, hopefully with lots of success. And there's three important things I guess I'd like to say when it comes to looking toward the future. One, spend as much time with you can as you can with your family, friends, loved ones. I mean, those are the important aspects. Nothing else is really important. So that's key to living a good lifestyle. Stay in touch with your family and friends, especially your loved ones, and tell them that you love them every now and then. Number two, this is important. Don't sweat the small stuff. I mean, life today is inundated with lots of small details, actually thousands, millions of details. You're just going to get bogged down, and it's important to understand really what's truly important in life, and that's looking at the bigger picture. Spend your time on the most important aspects and not on the small little details that will just tear you apart. And they're time wasters. So the number three big thing is, hey, let's take trading Forex very seriously this year. Treat it as a business, and I guarantee Forex will change your life. So, with that all said, we're going to get right to the charts. We're looking at the trading opportunities for January 2016, January the 11th to the 15th. That's for the upcoming week. And we're going to start with the very first chart. Okay, as always, we're going to start with the Euro USD daily. And you can see on this chart here, price basically has been consolidating within a triangle. So we have a lower trend line. We have an upper trend line. Price is slowly being squeezed in between the two lines, and finally, it looks like there's a breakout. Last week's candle, I'm sorry, not last week's candle, but well, last week you can see price bounced off of support with one bullish candle here. Then we had a huge bullish white candle here. That was on a Thursday. Friday was a bit of a dud, with the non-farm payroll. And you can see it's still a bullish pin bar in the sense that we have a huge tail to the downside. Price went down all the way, but the buyers pushed it all the way back up. It looks like price is going to be breaking out of the upper trend line, and I basically see price going a little bit higher. You can see right now price is above the blue line, which is the 50. Price is above the 21. So price is both above the 50 and 21. And these lines, especially the 50, indicates midterm market sentiment. Even though the 50 is going sideways, but price is well above it. And you can see with this dash line right here, that's the 100 moving average. So the most likely place for price to go next, if it's going to indeed break out from this triangle, will be higher. So let's see how many pips that would be. We've got about 100 pips to move to the upside, and at that point, then it'll be testing the previous high, swing high right here. So price could certainly make a double top, one top here, second top here, then price may come back down again. But I'm looking at an upward uptrend continuation, especially above the 110.60. So if price gets above this area here, the 110.60, price is going to definitely go higher because this is the next major previous swing high. However, there is a caution, and you may want to do this. The there could be a breakout entry above the 109.60. Okay, that's right above here. So I've created a breakout point just a bit higher. So price goes up to the 109.60 and higher. Price then most likely will head up higher the following week before coming back down. Or you may just want to not trade on a Sunday, Monday, and just wait for the next day to close. Okay, and that's what I see over there. Again, this red line dictates or tells us where the previous week before last week closed. This is on the Friday, so this is the Sunday, Monday open. Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. Okay, and one other thing I want to show you is that on the weekly chart, if I switch to the weekly chart, let's do that right now, and I'll probably have to zoom in because I've got all the there you can see this is a pin bar. This is a weekly price bar. You see the long wick right here off of the support area with a bullish. This is a bullish pin bar. So that's another reason why I say price most likely will go higher to at least this area right here. Okay, and I'm going to switch back to the daily. Okay, so again, this is a closer look. It seems like price is broken out above the triangle upper trend line. There's the daily pin bar close on the Friday. And again, you may want to, this may be cautionary. Will price actually go higher or lower? I believe if you kind of have a pending buy stop order right about there, what I mentioned at the 109.60 area, then that would be a good place to take a buy trade to the upside, and you can even place a um, stop loss right below the 50 right here or the 21. Even the conservative stop loss would be below the 50 right here, below this pin bar. Okay, so MACD right now currently is above zero. Let's switch to another chart, and we are looking at the British pound USD daily. Now, this pair absolutely has taken a nosedive. I mean, if you want to look at how many pips, we started off with the high here, all the way down. It's gone down 676 pips in just about 3 weeks or so. So that's quite a big drop. I believe price is in a downtrend. I mean, there's no reason to consider price changing its course right now. We have already broken the 2015 low. You can see that, and that was at the 1.45650. So we've price on the Friday, last Friday, broke the low of 2015, and I believe price is going to continue going down. However, this is the cautionary thing. It made a big move down, and you may want to wait for price to come back up to retrace a bit, and then look for bearish evidence to the downside to continue a downtrend trade. Okay, again, this could be a false breakout to the downside. I don't know, but the cautionary thing would be just don't trade right away. See what happens next. If price goes higher, then just wait, 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 and then look for bearish evidence to the downside. Okay, so the other thing is price may even come back all the way to the lower trend line here. Price may come back here, which would be almost a I'm going to do a fib thing here for you. Okay, take a fib from the high to the low. Okay, and you can see it, the 38.2, 50% retracement, 61%. So anywhere in here, price may come all the way back up to here, at least between the 38 and 50 before coming back down again. But it's something that you'll just have to um, wait and see. Okay, and right now, again, just to let you know, the market sentiment, we are in a downtrend. The price sentiment is we're in the looking for trade opportunities to the downside. Price is well below the 8, well below the 21, well below the 50. So price basically is in harmony. All three trend lines are pointing down. However, the space between the lines is getting extended. It's getting wider and wider, and at some point, price has to pull back again. So just be aware of that, and that might be the best thing to do. Is just wait for a pullback, retracement, then look for bearish evidence to the downside. Currently, MACD is well below zero. Okay, so now we get to the Australian USD, and again the same thing here. You can see price has gone down, 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 and it's gone down by pretty huge volatile price bars. These are pretty good price bars on to the downside. I believe price is just going to keep going down lower to the next support area, and that will be testing the 2015 low, which is 0.6899. So that's the 2015 low. Why wouldn't price go down further just to retest that area, then bounce back up again? So that's what I foresee for this week. Caution, price, we are near resistance, I'm sorry, near support. However, I believe price should probably come back down, and it may do that in one day, just come back down and then bounce right back up. If it bounces back up, just wait for a pullback, wait for a retracement, then look for bearish evidence to the downside to take another down trade. Or as soon as it comes back down, you can even possibly place um, a buy limit order down here in case it comes back down and then bounces right back up, and then you would be in right at the bottom. Your stop loss would be just below here, somewhere below the 2015 low. So stop loss should be then 0.6880, somewhere in that area, if you want to take a buy limit order right there for a counter trend trade. MACD is below zero. I don't see any reason why price should bounce up at this point, but it may. So there you go. That's the Australian USD. And I believe it's the same with the New Zealand USD. That also has been on a tear, on a down tear. However, in this case, the price has also gone below the 100 moving average. You can see that, and it's closed below the 100. So that's basically indicating to me that price is going to keep coming down lower to at least the next support area. It may come down just to here, just to show you. It may come down to this area right here. Okay, but once it comes down to here, it most likely will come down further to again retest a previous major swing low right here on the left side of the current price. Okay, so again, I believe that New Zealand USD, we're in a downtrend. You could take a limit sell order at 66.80. Let's see where that is. 66.80 would be around there in case price comes back up. So price starting with the new trading week may come back up, and you can take a sell limit order at 66.80 for price to go back up and then a bounce back down. So you may get in early there, or just wait for retracement and then look for bearish evidence to the downside before getting in. Okay. Again, on the weekly chart, we had a bearish engulfing pattern. I will switch that right now. And there you go. You look at that huge weekly bearish engulfing candle. The previous week was a very small little doji. So it looks like the indication is for price to keep going down much further. After breaking this upward wedge pattern formation, you can see lower trend line, upper trend line. So with this price bar, it went down lower. It may come back down to retrace, but again, we're basically looking at sell trades to the downside. Okay, that's what I see there. And now we're going to move to the US CAD. Now, US CAD was the complete opposite. It has gone up and up and up, and seems to keep wanting to go higher, and I believe it will. I mean, fundamental forecasts for the Canadian dollar show that it will continue to weaken into 2016, and that could be good or bad news depending on who you are and what you're looking for. But in this case, for Forex traders, we can certainly see that price is going to continue going higher. Now, there is a long-term resistance that goes way back of resistance of a 1.4300 area, 143.50. So I believe price is still going to head up higher. And again, You can see price when it comes to market and trade sentiment and price sentiment. Price is above the 8 right here. Price is above the 21. Price is above the 50. All three trend lines are pointing up. They're also getting wider, 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 and especially the 8 to the 21. You see right here, the space between the two lines getting wider, indicating that the price in the uptrend is strengthening and most likely will make one or two more pushes to go higher before bouncing back down again. So again, price can't keep going up forever. It's got to come back down sooner or later. So again, I see an uptrend continuation. You can almost take a buy trade right now, or just wait for a bit of a retracement and then look and then getting in with a buy limit order, or just taking a trade right now. But like everything, I think price is going to come down just a wee bit to even. Here's the daily candle. Even if you take a price, let me just. Even if you take a buy limit order like around here 141.20, 141.30, price may retrace and then go back up higher. So that's the idea. Buy limit trades on dips. That's really what we want to do. We want to wait or watch for a pullback and then look for a counter trend trade as well, which means if we see one bearish candle, then possibly get in right away. After that, price may then come back down to at least, I'm going to draw it in. Okay, we'll draw in a little rectangle right here. Okay, okay. So price may, if you get one bearish candle price on the daily chart, that is, price may come back down all the way to this area here, which is almost a 50% retracement from here to here. If you're going to do a fib, just to show you again, here's a fib. Okay, so 50%, you see right there? That's the 50%. So 50 between 50 and 60. So price may come back down all the way there. And let me just get rid of this. Oop. There we go. I've gotten rid of that. So price may come down and then look for bullish evidence to the upside. Okay. And that's that. And finally, we get to the US Swiss franc. Now, this pair is a really difficult pair to trade. I will be honest with you. It's kind of went up really high, went down. It started trading like sideways, went up again, is down again. I'm not really too sure what's going to be happening here. The MACD is just slightly above zero, and it looks like this is a kind of a pin bar here, bearish pin bar after this huge bearish candle on the Thursday of last week. So right now price is below the 21. It is below the 50. Um, this dash line here is the 100, so price may come back down to this area of confluence. You see, and the reason I say confluence, we've got the 100 with the dash line, the 100 SMA, we've got the long-term upward trend line, we've got a support area, here's major previous swing low, a minor swing low, so anywhere here, price may come back down. If that's the case, most likely price will go higher, so watch for a down movement, and then a bounce up looking, and then you would be looking for bullish evidence to the upside, like one bullish candle or a bullish pin bar or a bullish engulfing candle. That's what you'd be looking at. So my basically, you can stay away from this trade if you want. I would just kind of wait. You want to take a buy limit order down here somewhere in case price goes back down and bounces back up. Or you want to buy on the breakout above the 101.30, which is right about there. So if you place a buy stop order, in case price goes up and then up and through, then price hits your buy stop order at 101.30, most likely price is going to go and retest a previous 2015 high, which is the 103,003 area. So once price comes here and goes through, it most likely will retest the previous 215 high and then make what's called a double top and then possibly come back down again or go higher. We don't know. It's a wait and see situation. So the final pair is the US Japanese daily, again taking a nosedive to the downside. Switch to the weekly chart. Let's do that really quickly. You can see this huge bearish engulfing candle. The previous week was a small little doji, which indicated uncertainty. It was quite even between the buyers and the sellers, but last week certainly established who's in control, and these are the sellers. So I'm looking for price to keep going down and at least retest this major previous swing low and bounce up. So price could come back down to the 116.22 before bouncing up higher again. Switch to the daily, and that's what I see here. This is a bearish pin bar right here. You can see that. So I expect price to keep going down, and you can either take a sell trade right now, but take a small sell trade. Don't get in with lots, or wait for a rally. Wait for price to come back higher, closer to the to this resistance area in the gray rectangle, then look for a bearish evidence to the downside. Okay, so basically we're in a downtrend continuation. Price is below the 8, below the 21, below the 50. Price seems to be in harmony with all three trend lines. They're all pointing down, and the space between them getting wider and wider. So this really is the next logical area of support, 116.22, before price most likely will bounce up again, and then we'll wait and see what happens another week. Okay, so that's what I see. Happy trading, everyone. I look forward to your questions, and take care. Be careful with your trading, but let's take it seriously for this year. Try to create a journal. Pay attention to why your trades are not working out. And if there's anything I can help you with, then please contact me. I will be more than happy to do that. So take care and happy trading. Bye for now.